Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of corporate filings. And today we're diving deep into Cannae Holdings' latest report to see if this company is a treasure chest or a leaky ship. Scroll Cannae Holdings and Accession consolidated balance sheet scroll. Alright, let's jump right into the numbers. As of June 30, 2025, Cannae Holdings has total assets of about $1.78 billion, down from $2.22 billion at the end of last year. It looks like they sold off some significant assets given that drop. Speaking of selling things, they've got over $500 million in assets now classified as held for sale. This actually relates to their big news about Dun & Bradstreet being acquired. Yes, Dun & Bradstreet is being sold for $9.15 per share in cash. This deal is expected to close later this year, and because of this, Cannae is now showing their investment in Dun & Bradstreet as a discontinued operation. They even sold off 10 million shares of Dun & Bradstreet in the last quarter for nearly $90 million. This move definitely changes the shape of their balance sheet. Now let's look at the income statement. For the 3 months ending June 30, 2025, Cannae reported a net loss of $240.5 million. That's a pretty big number. And for the 6-month period, the loss balloons to $355.5 million. All of this adds up to a loss of almost $4 per share for the quarter, which isn't a great sign for shareholders. A huge chunk of that loss comes from their investments in other companies. For example, their equity pickup from Alight shows a loss of over $81 million just for the recent quarter. The report details that this is largely due to Alight taking a goodwill impairment, which is basically acknowledging that a previously acquired piece of business is worth less than they thought. And when we talk about impairments, the report mentions a $59.1 million impairment on their Alight investment for the 6-month period. It seems like they're writing down the value of some of their holdings because they're just not performing as well as hoped. Let's shift gears and look at their restaurant group. Restaurant revenue took a hit, dropping by about 5.7% in the second quarter compared to last year, and it's down over 6% for the first 6 months. This is partly because of a big drop in customer traffic, with guest counts down over 12% at O'Charlie's and about 2% at 99 restaurants. What's also concerning is that their cost of doing business in the restaurants went up as a percentage of their sales. For example, the cost of food and beverages like beef and poultry increased significantly. This means that even with menu price adjustments, they're struggling to cover their rising expenses, squeezing their profits. And within their corporate and other segment, personnel costs really stand out. They jumped by over $17 million in the second quarter compared to last year. A big reason for this was a change in executive management, leading to a large cash payment and accelerated stock awards, which is a significant cost of business. On top of all this, there's something called a put right related to a director's shares. Basically, the company might have to buy back a significant number of its own shares from a director, potentially costing them around $60 million depending on the stock price at the time. This is a future obligation that could impact their cash. Speaking of buying back stock, Cannae spent a significant amount of money repurchasing its own shares. In the first 6 months of 2025, they spent over $112 million on these buybacks, continuing a trend from previous periods. This often signals a company trying to boost its share price or return value to shareholders, but with the large losses they are reporting, it makes you wonder about priority of these actions. They also authorized a new 10 million share repurchase program in March 2025. So they have the ability to buy back even more stock moving forward. Across the board, the company reported an operating loss of over $60 million for the second quarter and over $82 million for the first 6 months. This means their core operations are losing money even before considering things like interest expenses or investment gains and losses. Their investment in Black Knight Football, which owns AFC Bournemouth, is also showing losses. While the revenues at Black Knight Football did increase mainly due to a better league standing and player loans, the overall operations are still losing money. Looking at cash flow, what's really interesting is that their operating activities used up over $12 million in the first 6 months of 2025. This is an improvement from the nearly $47 million used in the same period last year, but it still means their main business operations are burning through cash. They are relying heavily on investing activities like selling off assets to bring cash into the company. Now let's put on our Warren Buffett hat and look at the bigger picture. Cannae Holdings is in a period of significant transition. The sale of Dun & Bradstreet is a massive event, and it's understandable why their financials are looking looking a bit messy with those assets classified as held for sale. However, the drop in restaurant revenue, rising costs, and the significant impairments on investments like Alight are definite red flags. The company's strategy seems to be focused on actively managing its investments and seeking liquidity from them, but the core restaurant business is clearly struggling. The large personnel cost related to executive changes and the ongoing stock buybacks, while potentially good for share price in the long run, seem a bit aggressive given the operating losses and future obligations like the put right. The biggest weakness right now is the profitability of their direct operations, especially the restaurant group, and the write-downs on their investments. The big question is whether the liquidity generated from asset sales will be enough to cover operational shortfalls and management's strategic moves. They are facing significant challenges in turning their investments into a stream of reliable profit. While the D&B sale could bring in much needed cash, how they deploy that cash will be critical. We'll be watching to see if they can turn things around or if this is the beginning of a much steeper decline. Alright, that's our breakdown of Cannae Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.